What is going on, everyone? Welcome back to another video. Please hit subscribe right now. It's not even 10 seconds into this video, and I'm just asking you to please go ahead and do that. And if you like this video, you can also watch other videos just like it on my channel about some stock analysis. So let's get right into it. As you can see by the title of today's video, which you should also be liking this video, you can see that we're going to do some stock analysis on Salesforce. Recently, Salesforce was in the news because they did agree to acquire Slack. And Slack is the biggest competitor to Microsoft Teams. So Salesforce, this is its bid to go up against the Goliath that is Microsoft by enhancing its own features and its own technology by incorporating Slack. Now what we're going to do to start out is we're going to look at the analyst expectations for Salesforce. Its ticker symbol is CRM, and this is TipRanks. TipRanks is an awesome website to check out price analysts and price forecasts, price targets for any stock that you can think of. And in this case, we're looking at Salesforce. As of today, 12/8/2020, Salesforce is trading at $226, and you can see that the average analyst price target is $278, which is a 22% upside. We have a 217 low target, the average is 278 like it says, and then the highest is about 320. Right now there are 21 out of 26 analysts buy ratings, or analyst ratings, I should say. 21 of the 26 are for buys, 5 are for hold, and 0 are for selling. None of the 26 analysts think that you should be selling Salesforce. And we're just going to look at this next one, stock analysis, and you can see, it's a neutral. So this is a neutral kind of stock. It's a it could make a move to the upside, and it could do something special, but it's just going to be slow and steady for now. And that's how Salesforce's story has always really been. And we'll get into that too. Next, let's look at the financials of Salesforce. So again, I think you guys have already seen me do this before, but this is MarketBeat. And this is a great website to get financials on any stock. And it's absolutely free to see like the balance sheet, the income statement, the cash flow statement. Some websites like Yahoo Finance now make you buy the premium version in order to view any kind of good financial info. In this case, MarketBeat is a great website, great useful tool to see the full financials of a company. Nothing is hidden, and you don't have to, sign into a paywall and subscribe to anything. You just go straight to the website. So as you can see, let's look at the revenue. We're going to start out in the income statement. Since 2015 at least, Salesforce's revenue has grown very consistently and very nicely too. It looks like about $3 billion each time from 2016 going forward. It's about 2 and some change, let's just say that. So about $3 billion, and growing in revenue every single year, and in 2020 they had hit about 17 billion, and this is continually growing even throughout the work from home pandemic. And we can see that in 2020 they actually had a net profit of about 126 million. That's a lot. That's pretty good. That's pretty good for a tech company. Again, a lot of tech companies, you're not expected to see a profit for a very long time, and Salesforce did become profitable within the past few years. As you can see, actually it was not profitable in 2016. So with that being said, let's check out the balance sheet of it. The balance sheet is important because we're going to see what is the working capital, what is the total current assets versus the total current liabilities. So as of January 31st, 2020, Salesforce had about $4.1 billion in cash on hand. That's pretty good because that pile has been growing. And they're actually, I believe, don't quote me on this, but I believe that they're buying Slack. It's $28 billion in all stock, so that will not affect the cash on the balance sheet. Total current assets is about 16 billion. Let's just round up. It's about 16 billion, and the total current liabilities is about 15 billion. Let's just round up again. So that's not that great, but it's pretty good. They have a positive working capital. And long-term debt and capital lease obligations, it's been somewhat, it's been okay. Like in 2020, it was lower than it was in 2019, which is good. So that's not too much. That's not too bad. About $2.6 billion in debt. That's not bad at all. And then if you look actually at total assets versus like overall versus total liabilities, I mean, assets are double, a little bit more than double the liabilities. So that's really good to see. And let's take one last look at the cash flow statement, because I like to see how much companies are paying down in debt. Are they consistently paying down in debt? So as we can see, a cash flow statement always starts with the net income at the top, and then it goes down. And what we're going to do is we're going to look into the net cash from investing activities, and they actually have been paying down about, let's just say it's about $500 million a year consistently, minus the 2019, because they obviously procured $2.9 billion in debt, and then they repaid about $1.6 billion in the same year. So anyway, this is a really good sign. They are continuously paying down debt, and they can do it because, again, they have cash. So that's a good sign too. And now we're done with the financials. Let's go look at the portfolio value from Portfolio Visualizer if we were to have invested in Salesforce. I know that Salesforce had IPO'd in 2004. So what we're going to do is we're going to do a time period of the entire time that it has been available to trade, so 2004 to 2020. And Portfolio Visualizer only goes up to the last current month, so we have all the data on Salesforce through November 2020, the end of November 2020. This is a starting out investment of $10,000 back in 2004, no rebalancing, and let's see what it comes out to be. Again, it actually IPO'd in July 2004, so there you go. This is pretty incredible. $10,000 initial balance is, as of November 2020, about $580,000. That's a 29% compound annual growth rate, and that's pretty amazing. Like, that's pretty good. That's pretty good to consistently, over about a 16-year period, get almost 30% for your investment without having to do anything, again, without rebalancing or anything like that. And let's actually look at the annual returns. So if we look at the portfolio of Salesforce, in 16 years, it was only down 1, 2, 3 times. 3 times in 16 years was it ever down. And also, it was double-digit growth. 1, 2, 3, 4, that's actually triple digit, but 4, 5, 6, 7, 8, 9, 10, 11, 12. It has been double-digit growth basically every single year that it was not down, except for 1 year in 2014 where it only hit 7.47% of a return for that year. That's pretty incredible. Double-digit growth, double-digit, even triple-digit back in 2009, but double-digit growth the entire time it has been trading. Except, again, minus the 3 years of down years and the 1 year that it was single digits. Even still, 12 out of 16 is pretty good. I would take that in a heartbeat, to have 12 out of 16 years be like double-digit growth. Let's just go with that. So anyway, this was it, a quick 10-minute video. Hope that you guys did enjoy it. Again, if you did like it, please subscribe to this video and go check out my other videos as well. Thank you.